All right, we're going to get into finding more juicy key levels, guys, but I want to talk about how excited I am about Antarctic Exchange. This is an absolute game changer. It's changing the way people trade because in the past, you had to worry about market makers screwing you over, scamwicks. You never knew if an exchange was going to freeze your account, delete your assets, end up to be a scam. This is the first ever decentralized exchange where you completely own all of your own assets, but it functions as a centralized exchange. It has all the functionalities of a centralized exchange. It's just as clean as a centralized exchange. It has a mobile app like a centralized exchange. It has so much flexibility where you can open multiple trades at the same time for the same asset. You could be in 4 Bitcoin longs, 4 Bitcoin shorts at the same time. Additionally, you can use your unrealized profit as margin. And what's so great about this exchange as well is the fact that it is every single person who trades on this exchange is a co-owner of the exchange. If you trade on the exchange, you yourself get paid of the trading fees that the exchange makes. We all own this exchange together. If you decide to put capital into the liquidity pool, it doesn't even have to be a lot. It could be as low as a couple $100. You now share in the liquidity pool profits, which basically comes from people getting liquidated. This exchange is made by traders for traders. It solves all the problems of your typical centralized exchange. Because everything is decentralized and 100% self-custody, you always know that your money is secure. Everything's transparent on the blockchain. And the Casper crew, basically anybody who signs up under my link, gets the lowest fees in the game. 0% limit order fees, 0.01% market order fees, lower than any other exchange out there. In fact, this deal is only possible if you use my link for Antarctic. We are changing the name of the game when it comes to derivative futures, trading crypto, and a lot more exciting things to come in the future for Antarctic. So make sure to click the link in the pinned comment and description. They even have demo trading. So if you're learning how to do this, you can demo trade on Antarctic without risking any of your money. So let's get right into the session. All right, y'all, welcome to Support and Resistance Part 3, where we're going to be going over volume. What is volume? Volume is a way to measure how much of the asset exchanged hands at certain prices. And we're going to be looking at a tool called the Fixed Range Volume Profile, the Anchored Volume Profile, and also the Visible Range Volume Profile. We're going to get into all three of those. But before I do, I want to touch real quickly once again on basic support and resistance. When we're doing our top-down analysis, we start on the monthly, we go to the weekly, we go to the daily, we go to the 4-hour. These are how we get our big levels. But if you are scalping, you can do this on low time frames. You can go to the 10-minute time frame. You can go to the 5-minute time frame. And what you can do is you can trade ranges as small as this on the 5-minute time frame, right? You can literally do something like this. Say I'm going to look for shorts at the top of the range. I'm going to look for longs at the bottom of the range. And I mean, just look at this, right? You've established your top and your bottom here. And so you literally had a short, a long, and a short that potentially could have hit a take profit one. In fact, I did take a short from here, and I did hit a take profit one on that short trade. All right. So you can literally trade the 5-minute time frame doing this exact thing. And if you happen to have like a weekly or a daily level in your 5-minute time frame, man, you know that's a juicy level. Okay, so I just want to point out that what works on a big time frame works on a low time frame. Trading on the daily and trading on the 5-minute are the same thing. It's just you have less time to make your decision. You have less margin for error the lower the time frame you trade on. Okay, so I want to take a look at volume here. We're going to start on the weekly time frame, and I want to take a look at an indicator called the Visible Range Volume Profile. All right, so you're going to go to indicators up here, type in VRVP, the Visible Range Volume Profile. Make sure to star it, click that on. And what this is going to do is this is going to show you where the majority of the volume is, okay? So let me show you exactly what we have here. This is showing you the volume of pretty much everything that's visible on the screen. So we can go all the way back in time, and this volume profile, I'll get into exactly what it means in a second, is showing you all the volume that's visible on your screen. So as you zoom in, this volume profile is going to change because, hang on, it's not changing. There's something wrong. Hang on, let's refresh the screen. There you go. As you zoom in, it's going to change because it's only dealing with the volume that you have here on the screen. So I don't have the indicator on anymore. I'm going to have to put the indicator on. And you can use this on any time frame, the visible range volume profile. The reason why it's called visible range is because whatever's visible on your screen is what it is showing you. Now, what we have here, and first of all, you're going to double click it, and I like to set up my volume profiles as such. Row size, 200. Value area, 70. I go to style, I click my POC, that's called your point of control, and I also like to make mine blue and purple. All right, I recommend you do that too. Now, what are we looking at here? There are 3 things that we need to be very much aware of. First of all, we have this white line. This is the POC. What does the POC mean? The POC is the point of control, and this means at this exact price, most Bitcoin exchange hands most at this exact price. Most people bought and sold at the exact price of 96,831. It's the highest volume node of all the price action you see on your screen. Okay? More people bought and sold Bitcoin at this exact price than any other price that you see on your screen. All right, so this is called the point of control. Then you can see these bars here are shaded, right? They're shaded, blue and purple, and then all of a sudden they turn gray. The top of the purple area is called the value area high, and the bottom of the blue and purple area is called the value area low. What does this do? This is giving us the fair value zone for the asset. The point of control is most fair value. All right, if you want to buy something on sale, the point of control is not the place to do it. You want to sell something at a premium, the point of control is not the place to do it. This shaded area is telling you anything above this area is considered overbought. In other words, anything above this area, the asset is overvalued from what it should be, and there needs to be a correction to the downside. Anything below this area is telling you the asset is oversold. It's undervalued. It's actually costing less than it should. And so when we come below this area, we expect to move back into the fair value zone. And you can look and see here that just based on what we have on the screen, based on the fair value zone, it's been very accurate. Whenever price comes to an area where it's considered undervalued, we have a correction to the upside. It comes back into the fair value zone. Whenever it comes up to above that fair value zone, above the value area high, well, it's overvalued and we have a correction back down to the fair value zone. So just to reiterate, the bottom is called the value area low because it's the lowest point of the fair value zone. The top is called the value area high because it's the highest point of the fair value zone. And the point of control, where most people were willing to buy and sell, is called the point of control. Now, just think about this in general. These levels are determined by the market participants. The market itself, the participators in the market are determining these levels, all right? Because the only reason the point of control is the point of control is because most people decided this was a good price to buy and sell Bitcoin, right? The only reason this is the value area high is because most people in the market decided they were going to sell up here because the market determined, yeah, you know what, this is overvalued. Let's short this. Let's sell this. The only reason this is considered the undervalued is because the market determined, yeah, undervalued, let's buy here. Right? And so these 3 levels, the value area high, the value area low, and the point of control, are always going to be key levels on your chart in confluence, in conjunction with your high volume, with your high time frame levels. So you can see here we have a monthly level right at the value area low. That's called confluence, 2 things in the same spot, right? This visible range volume profile is going to change depending on how you zoom in and zoom out. And I typically don't use this indicator. I typically like to use something a little bit more precise. And I'm going to get into that now because you can see this changes a lot, right? But it is good if you want to say, okay, like what's the highest volume node in like the entire uptrend or whatever, right? And you could take a look at with the visible range volume profile. The 2 main volume indicators that I like to use are the fixed range volume profile and then also right here, it's under projection. I like to use the fixed range volume profile and the anchored volume profile. Here's the way you're going to use these. Remember how in the beginning of the course when we were looking at the fact that 90% of the time price trades sideways and then 10% of the time it gets a big move. You're going to identify those sideways ranges, right? Every time you identify a sideways range, because you can identify it as a sideways range without volume, like you don't need volume to see that the market determined that this was resistance and this was support. You don't need any fancy tools to tell you that. But now imagine if you do have a fancy tool to tell you the exact price that the market has considered it to be. high and low, right? Because trading is all about buying low and selling high. So now what we can do is we can take the volume, the fixed range volume profile, and drag it through each one of these ranges. And now what we can do is we can see the volume profile within the sideways range itself. Okay, so it's not going to change when we zoom in and zoom out. It's going to be fixed. That's why it's called the fixed range volume profile. And what you want to do every time you come to a chart, as you're looking for your daily, your weekly, and your monthly levels, you're going to be pulling these fixed range volume profiles. Now look at this. When we came down to our daily level, the one that we longed in the Casper Crew VIP Discord at jasoncaspertrading.com, if you are looking for a thriving trading community with pro traders to help you along on your trading journey, check out jasoncaspertrading.com to join the VIP Discord, the best trading community in the world, where myself and other instructors, although we do not give signals, we do walk you through our live trading every single day, multiple live streams a day, 3 or 4 live trading streams a day, where we're telling you exactly what we are looking for. And if we see a trade, we don't give signals, but we let you know what we are doing according to our analysis so that you can find confluence with your own trading analysis. Of course, inside you will find myself and other instructors, such as Thor, one of our great instructors, live streaming every day. Boyan, man, in one live stream, dude took 4 scalp trades, absolutely crushed it. Of course, White Phoenix is in here as well, crushing it with his charts and his daily live streams. And of course, I'm in here too. We're trading Bitcoin, altcoins, stocks, Forex, commodities. You'll find it all in here, plus every single month. We do games where we give away thousands of dollars in cash prizes. And no matter what time of day it is, you will find conversations going on, people to help you, and our advanced TA channels where seasoned traders who have been vetted by the team are posting their analysis, their levels, and their ideas to help you on your trading journey. JasonCasperTrading.com to join the community. Links to this are in the pinned comment and description. Go ahead and click the link to join the best trading community in the world. What happened, right? Well, we came down to this level. It was a daily level, and we already went over why we had liquidity here. So not only did we have liquidity and a daily level at just visible support with our green box, we also now have the value area low. We know that the market has considered anything below this blue line to be undervalued, looking for a correction to the upside. And so now what we have here is confluence. We have our daily level, we have our value area low, we have our box, just our visible support where price came down here multiple times, and we have that liquidity. Now look at this. We have our weekly level at 98,345, right on the point of control. Pretty crazy. Also, if we take a fib, and I know we didn't get here yet, we also have the golden pocket right there. So what you want to do with this volume is you want to look for where are those key levels on the volume profile, and then see if you can find other levels that you've done through other analysis that line up perfectly. That's where you want to be looking for your trades. And here's how volume theory really works. We can assume that if we come to the value area low, if we lose it and then reclaim it, the probabilities are more so than not that we will make our way up to at least the point of control and then probably fill the entirety of the value area. On the contrary, if we come above the value area high and then we come back in, probabilities are most that we will come down to the POC and then eventually all the way down to the value area low. And so one of the ways you want to set up your trades now is, yeah, you're going to look at your levels, but as we look at this, we can say to ourselves, okay, the best trades I can take are going to be from the value area low and the value area high of the range. The best trades are going to be where we have the price objectively oversold or objectively overbought. And so you're going to put your support and resistance levels here at the highs and the lows of your range that you've determined just by looking with your eyes. Now we're adding the volume, and then you're going to be looking for your high time frame levels. All right. And so this is how you're going to do your analysis to determine where you're looking for a trade. And this is how you can start to plan out your trades. Because if you know, for example, I'm expecting a rejection from this box of resistance where I have 4 levels. I have the value area high, the daily, the weekly, and another daily. You can tell yourself, okay, my idea will become wrong if we just keep pumping up past this daily. And you know what? I'm going to look for a short here, and I'm going to shoot for back to the bottom of the range, giving me, let's say, a 3-to-1 risk-reward ratio. This is how now you're planning out your trade, right? The price action hasn't even got here yet. but you already kind of have a plan in the back of your mind saying, this is where I'm going to look for a short trade. Now, of course, we haven't gotten to what we look for to actually pull the trigger and take the trade, but it doesn't matter for now, because for right now, we're coming to a chart, we're doing an analysis, and we're making a plan. And our plan involves key levels on the chart and risk management. We're already setting ourselves up for success because we know this is resistance. We have 4 things here telling us this is a key resistance where price is likely to get a rejection. And we can kind of have a rough idea and say, you know what, if I wake up tomorrow and price is in this area, I'm going to be looking at different indicators and tools to determine, should I take a trade here? And I'm already telling myself, you know, this is a sideways range, which means if I'm shorting resistance, my final target should be support. This is going to give me about a 3-to-1 risk-reward ratio. I'm risking 1 to make 3. And then you ask yourself, is this trade even worth it for me to take? Do I want to risk 1 to make 3, or do I want to wait for a better trade setup? Maybe you say to yourself, you know, I'd rather take a higher risk-reward trade setup, so I'm going to shoot for the weekly level. I'm going to shoot for the weekly level. If we come to the daily, I decide not to take a trade from here because it's just not good enough risk reward for me. I'll wait to see if we reject from the weekly because now I'm risking 1 to make 7, right? And so this is how we're going to start to think over and plan our next trade, looking at the volume. Now, another thing very important about these the volume profile is this. There's the checkbox that says extend right. As the price action develops, these levels are going to change, because as the price continues to, let's say, do this, the value areas are going to change because people are going to be buying and selling at different prices, right? So there's 2 options here. Option number 1, you don't extend right, and you are simply looking at the volume as it stands. Let's say, as it stands like in a little range here, right? Where it's not giving you the whole picture. Or if you click extend right, it's going to now shoot to where price action currently is. Now, both have their advantages. Both have their advantages. Let me tell you why both have their advantages. You would want to not click extend right, because when, like we said, support lost equals resistance, right? Which means this sideways range that we've already broken out of, the place where it used to be considered overvalued, is now going to be massive support. And so for this range, you would not click extend right because you want to know what was the fair value zone of this range. Because if we start to come back down here, right? Let's say we do come back down here, we are going to respect these levels again, right? When you break out of a sideways range, just like how support lost equals resistance, resistance claimed equals support, it's the same with these volume levels. In fact, you will oftentimes find price come back into an old range and then start to respect the same range again, right? So you want to keep track of these previous range, high volume node, low volume nodes. All right, I forgot to tell you, value area low, value area high, these are also called low volume nodes. And one thing also I should point out is the POC is most important, but also you look at these spikes here in the volume profile. This is showing you like the volume profile. The mountaintops are where the most asset was bought and sold, and the valleys are where the least was, right? So you could mark this out right here, say this is a high volume node, not as high as the point of control, but it's still a pretty important level. And you could see this little spike in volume down here too and say, you know, this is a pretty important level right here. Because, you know, we have a lot of volume coming in this little consolidation here, so maybe I should keep that on my chart, right? But in general, you do want to not click extend right for these previous ranges, because now you can see, like, if we do get a breakdown, look at this. We have the point of control, and right on the point of control, we have ourselves 2 daily levels, or we put on our monthlies. You can see right at the value area low, now we have a daily, a monthly, and a daily. All right, so you want to kind of keep those old ranges on your chart in the event of a breakdown. This is how you're going to obtain your key levels on the way down. Now, if you're trading the range as it stands, then you want to click extend right. And that leads us to our next volume indicator, anchored volume profile. This basically means you pick a spot to start it, and as the price action develops, it will just always show you the volume from the point where you clicked it to the current candle. Okay, so this is always going to show you the value area high, the value area low, and the POC. It's kind of like clicking extend right on your fixed range volume profile, but it gives it to you as if it's a visible range volume profile. So it looks a little bit, some people think it looks cleaner. I typically don't use this one. I typically use extend right on the fixed range, but it is a good indicator if you want to just like look at the range real quick and just click once, and then you don't have to worry about extend right You can just keep it here and it will automatically change as the price action develops. All right. So now we know about basic support and resistance, trend lines, channels, top-down analysis, monthly, daily, weekly, 4-hour levels. And now we know about volume levels. And you're starting to see how we're building confluence. Confluence is where there are multiple things pointing to one level that tells you this is the level that you want to look at. All right, guys, that is it for this session. God bless everyone, and I'll see you in the next.